The Nifty and the Sensex gain over 0.5%, led higher by banking heavyweights. The Nifty reclaims the 25,000 mark. The Nifty Bank outperforms the blue chips to end over 1% higher.
ICICI Bank over-delivers. HDFC Bank too turns in a steady showing with a moderate decline in net interest margins, unlike the mid-sized banks, many of whom also feel the credit cost pressure.
Reliance Industries shares end lower despite the company posting a good quarter, delivering a healthy profit even after adjusting for gains from the sale of Asian Paints shares. Meanwhile, Zomato delivers a solid show in the first quarter. Healthy growth coming in from Blinkit. Food delivery business also does better. The stock zooms 7% in afternoon trade.
Hello and welcome to Markets Forward, your go-to show where we get you up to speed with regard to what went on in today's trading action and set you up for tomorrow as well. I'm Nigel. With me is Surbhi. Well, Surbhi, a green close. Good to see. Maybe not out of the woods, but at least we took support at around the 24,900 and saw a bounce.
Absolutely, because intraday, the market had fallen below that level as well. So it was looking a little tricky in the morning. But from then on, there was a recovery. There were some decent earnings. And what we had was a pretty positive-looking screen. And we'll talk about it. It's basically very, very earnings-heavy and earnings-driven. Not too much of global news flow that was driving the markets today. But the banks were a big story. Pull up the Nifty Bank. And I think that's pretty much what it was. I mean, the big boys, the big banking boys have told you cannot ignore them. The market was positioned more for the mid-cap banking space, but actually the large boys, HDFC Bank and ICICI, delivered. So we'll talk about all of this and more over the next 20 minutes. Of course, all the corporate voices of the day, all the day's action and the events to watch tomorrow. But in fact, of course, the movers and shakers of the day will come through as well with Hormaz. And of course, we'll put the spotlight on Reliance Industries shares being down in trade despite what was a pretty steady first quarter. The spotlight on banking names will continue, as I just said. The smaller banks took it on the chin today. So we'll focus on some of those names as well, like AU Small Finance, and then map out tomorrow's events. But let's get to Nigel and your sense on the way the trade played out today.
Well, today was actually a good trading session. Should be the 24,900 mark was something that the bulls were waiting for, and they replied to it in style. What was good today was the Nifty Bank. Well, it defended the 50-day MA. It conquered the 20-day MA on a closing basis. Good going out there. However, the Nifty needs to get past the 25,150 odd mark and the 25,300 mark. Why do I say this? Because Friday's high was at around 25,150 and 25,300 is when we do have, the 20 DMA. That said, let's get straight to our first segment. Hormaz is standing by on the big wall with all the movers and shakers of the day. Hormaz, take it away.
Well, there was a green on the screen, yes, but then you can't deny the fact that there were a lot of earnings reactions that were on the other extreme as well. You take a look at Dodla Dairy at one point of time is down 8% at the lowest point of the day is where it ended. Eternal came out with results just a few minutes before close, and boy, did it build on to those gains. It was already up 3 to 4% before the results were announced, and now it ended 7.5% higher. And EPAC Durables, MRPL, of course, some poor earnings reactions again, and L&T Finance bucked the trend though among the negative NBFC reactions, ending almost 4% higher. It was the financials that continued to dominate proceedings today. It was the financials that ensured that the Nifty ended in the green. You take a look at HDFC and ICICI Bank. Of course, we'll talk more about that in greater detail. But AU Small Finance Bank, Union Bank, Bandhan Bank, all of them seeing a negative reaction today. Bharti Airtel has now become the third biggest company in India in market cap terms, surpassing TCS. So it was good going for that stock. GPT Infra won an order, as did Titagarh. Bajaj Consumer is going to consider another share buyback, and Newgen Software continues to get pummeled after its results last week. A sector that did well today, though, was the metal names. Lloyds Metals, Nalco, almost every constituent of the metals index ending higher today with gains of anywhere between 2% to as high as 4.25%. And lastly, stocks that ended at a 52-week high in today's session. Paradeep Phosphates, Borosil Renewables is another one, 7.5% higher on that stock as well. UPL had a good day, and as did UTI AMC, following the HDFC AMC path from last week, ending at a 52-week high. Back to you guys.
Okay, all right. Thanks a lot for that, Hormaz. Well, Reliance Industries, that's been in fine form. However, in today's trading session, the stock ended lower in trade despite clocking a good quarter. The firm saw a healthy profit even after adjusting for gains from the sale of Asian Paints. Brokerage firms, though, remain bullish on the stock. Sonal joins us to break it down for us. Sonal, the stock was falling there, but take us through some of those details. What are brokerages making of it?
Well, let's talk about the basic numbers and then we'll talk about the segments. For the revenues came in at 2.44 lakh crore rupees. EBITDA was higher on a YY basis to come in at 42,900 crore rupees. Margins at 17.6%, which compares with 16.7% in the year gone by. Profits, that is something that came at quarterly records at around 27,000 crore rupees. It was aided by an element of other income of 15,100 crore rupees, out of which 8,900 crore rupees came in from Asian Paints stake sale. In terms of Reliance Retail, reported double-digit revenue yet again, and this time around their area per square feet increased by, or revenue per square feet increased by 16.5% at 10,847 crores. Jio reported inline set of numbers, so the revenue growth came in from both subscriber growth and ARPU growth this time around. O2C EBITDA margin higher on a YOY and on a quarter-on-quarter basis, but do remember this time around it was also impacted by a maintenance shutdown that was taken in the month of April. Mukesh Ambani reiterated their plan of doubling their business every 4 to 5 years. So that was an important statement that came by. In terms of brokerage commentary, Morgan Stanley said that new energy, telecom, balance sheet were the bright spots this quarter. They have an overweight rating with a target price of 16.17. Jeffrey says that while O2C was impacted because of a refinery shutdown, the outlook continues to remain positive. Focus will shift to the AGM expectations. That will be possible listing of Jio. There is also a possibility of a tariff hike. They project 11% EBITDA growth in FY26. They have a target price of 1726. Motilal Oswal, they've gone ahead despite calling it a soft quarter. They've increased the target price to 1700 versus 1685 earlier because they're sanguine on growth prospects across the segments for Reliance Industries.
Got that, Sonal. Thanks a lot for that. But a slew of banks came out with their first quarter numbers. While the big fared well in the first quarter, it was a mixed bag for the smaller banking names. Gaurav has had a very, very busy weekend and a busy Monday morning as well. Gaurav, break it down for us.
Well, yes, it was a day full of action for banking names. We saw a few banks actually outperforming in trade today, and on the other hand, we also saw some banks who struggled in trade. So first, let's talk about HDFC Bank. When it comes to profit, the number increased almost by 12% on a year-on-year basis. Net interest margins, they declined almost by 19 basis points, but at core level, the net interest margins declined only by 12 basis points. Another key trigger here was that the asset quality remained stable, and all of which actually helped the bank getting up in trade today. Other than that, ICICI Bank actually was in focus, and the reason being that strong performance is what we saw. Profits increased almost by 15% on a year-on-year basis. Let's also not forget that the net interest margins declined only by 7 basis points, which was anticipated to decline almost by 18 to 19 basis points on a sequential basis. Again, the asset quality remained stable, and as a result, we saw some uptick in this counter as well. Let's also talk about Yes Bank. We saw a good set of number here, and I'll tell you why. Because the ROAs are actually moving towards that 1% mark. Bank reported ROAs of around 0.8%, and at the same time, net interest margins also remained stable for the quarter. Bandhan Bank, on the other hand, actually came up with inline set of numbers, we could say, but the weakness was there in terms of the asset quality. Specifically, when we talk about fresh slippages from the EEB segment, we saw the stress was rising, and as a result, we saw some kind of pressure in the stock price as well. RBL Bank also, same kind of pressure was seen in the stock price, and the reason being that although bank is saying that ROAs can reach around 1% in FY26, in this quarter specifically, net interest margins declined almost by 40 basis points. Now the street was anticipating 30 basis point of fall, and as a result, we saw some pressure in the stock price. AU Small Finance Bank, here also we saw some kind of stress coming up in the asset quality side, specifically in terms of credit costs. They have actually upped their credit cost guidance from 85 basis point to 100 basis point for FY26, and specifically for MFI, this credit cost guidance has been up to 5% on a year-on-year basis versus what it was anticipated at 3 to 4%. Lastly, let's also focus on Union Bank. Now, the numbers, when we talk about loan book growth, it was a little muted and lower than what the industry growth has been for the quarter. But what was another trigger is that in the near term, brokerages are not seeing any kind of triggers which will make the bank outpace the peers, and that is the reason why they have actually downgraded the rating. As a result, we also saw some pressure in the counter today. So definitely it was a day where we saw banks like HDFC and ICICI soaring in trade, but at the same time banks like AU Small Finance Bank and Union Bank actually struggled in trade today.
Absolutely not a big day for Tier 2 financials. It was a day for the big boys. Gaurav, thanks very much for that neat wrap-up. Let's go to our guests and quickly discuss the way forward for some of these banking names. We have Chandan Taparia joining in from Motilal Oswal Financial Services. And, of course, we have Anand Tandon to give us a fundamental viewpoint. Anand, first to you. Now, when we are going into these earnings, I kept hearing a lot of people sounding fairly optimistic about Tier 2 financials, just purely in terms of growth, getting better bang for your buck in the near term from a positional perspective. But what we've seen is that some of the concerns like asset quality stress or higher credit cost stress or margin pressure, it's still showing up more in Tier 2 banks than the large cap banks. What would your advice be looking at today's numbers for the next several quarters?
Well, that's inevitable for the simple reason that, the cost of funds for larger banks will be a little lower compared to the smaller banks. For them to make the same kind of profit, they will have to lend to the worst kind of credit quality. So while you typically have growth there because they are more eager to borrow, you also have the highest NPA possible. And, like I have been sounding out for the last some months now, that, we are now at the peak of the cycle in terms of clean balance sheets. From here on, it only goes downhill. And the more that there is pressure on banks to try and outperform in terms of earnings and so on, it will be at the cost of poorer provisions and the poorer credit quality. That is inevitable. Also, with the falling interest rate scenario, we will always have a pressure on NIMs. So the pressure becomes even more for the smaller banks. So at this stage, one should not be very adventurous and look for more stable banks which are more conservatively run rather than looking for the most aggressive growth.
Got it. Okay, all right. Got that, Anand. Let's go across to Chandan. Chandan, what do you make of today's trading action, though? 24,900, that was the line in the sand. We went to the line and the bull said, game on. Let's take this on. And that's why you saw a big recovery. But what about the trend? How's it looking on the Nifty? And the Nifty bank, the Nifty needs to do well. You need that star performer to come in there and make the runs. That seems to be happening. Where's it headed from here?
Yes, Nigel. Fantastic, I think. The summary you've given about the market, that yes, bulls are finding tough from last couple of days, but today's recovery is giving some stance that yes, the market again can head towards 25,250 marks. During the day, index drifted below 24,900, but somehow it reclaimed and managed to hold above 50-day exponential moving average. If I look at the weekly chart, index started to form lower top, lower bottom. But on the daily chart, if it manages to negate the lower top, lower bottom by holding about 25,050 or 25,080 by tomorrow, then I believe the index will again reclaim to 25,250. But one need to keep in mind that 25,250 is a major level. If market manages to move over the same, then only the major stance will be changed in the market. So I'm keeping two views in mind. First, the 24,800 is immediate support. Market needs to surpass about 25,080, and then momentum could be there towards 25,250 and higher levels. When we talk about Nifty, we need to focus on Bank Nifty index because the major recovery was seen in the Bank Nifty index, which managed to reclaim from the lower levels. Technically, it formed a hammer sort of candle, took support near 56,250, again managed to reclaim a key level of 56,750. So I believe if market has to hold, then the selective private bank and the Bank Nifty has to take the lead. So with support of 56,500, I believe Bank Nifty has potential to again get into the trading range of 57,000 to 57,250 marks.
Okay, that will spell good news for the Nifty as well. Got that, Chandan. Thanks very much. Stay on. We'll have more questions for you in just a bit. But let's talk about Eternal, the big zooming stock on the Nifty towards the afternoon. As soon as those numbers hit the screen, the market loved what they saw. So what's the fine print that the market is liking so much in Eternal's numbers? Let's ask Manglam. Manglam, so Zomato hitting all the right notes. What's working?
It is hitting all the right notes. If I told you that a company reported 70% revenue growth and stopped at that, it would be a good set. But if I told you 70% revenue growth, 35% decline in EBITDA, and 90% profit decline, and the stock went up 7%, you'd say, why? What exactly happened? Well, it seems like the worst is behind because one, management commentary is positive. Remember, the company has been disappointing on the food delivery growth front and the quick commerce margin front over the last few quarters. But now it seems like, the Blinkit losses have narrowed quarter on quarter and food delivery growth slowdown have stemmed. So two major problems the company both arrested. The management says year on year growth slowdown has bottomed out as they expect recovery from here on in the food delivery business. And in the very near term, quick commerce margins have also bottomed out. They expect if the competitive scenario remains the same right now, they will go ahead and see improvement in margins. Food delivery. gross order value has been stable at 16%. The last quarter also it was at 16%. Remember, the previous few quarters it had been coming down, so that has been stemmed. Blinkit revenue growth at 154%. EBITDA loss has narrowed quarter on quarter. Same time last quarter, the EBITDA loss was close to around 180 crores. Now that has come down to close to 160 crores. And add to that, the company has continued its store expansion. Now their total reach is at 1544 stores. And on District, which is the third growth vertical of the company, they see at some point in the next 5 years, annual revenue run rate to be $3 billion with EBITDA at close to around $150 million. So these factors working well. Remember the last quarter, the one thing that annoyed the street was that despite them raising cash and because of the competitive intensity, cash balance of the company had come down quarter on quarter. That problem seems to have been addressed as well, with the cash balance increasing from 18,824 crores to 18,857 crores. So all things pointing in the right direction, and that's what the street got excited about. The stock ended at the high point of trade.
Okay, wow, fantastic. And what a comeback. Remember last few quarters ago when there was this whole thing of bigger losses as the rollout continued in quick commerce? Well, Eternal really answered its critics today at least. Thank you for that, Mangalam. Let's quickly go back to our guests on this. Chandan, let's talk levels first. Do you see a bigger breakout? Do you see more upsides on Eternal?
Yes, in fact, the price behavior of Eternal is making higher top, high bottom. I still remember the entire price setup that earlier it used to take support at 200, that zone shifted to 220, then it headed to 240, and now the support is shifting to 255. So I believe with support of 255, the way it has negated the lower top, lower bottom, formed a strong bullish candle, it has potential to rally towards 278 to 300 mark. So I believe it offers a better opportunity after the corrective move of last 4 days, and stock has potential to head towards 300 marks plus.
Okay, just very quickly, Anand, do you like Zomato?
Well, I mean, from a business perspective, it's doing well. From a valuation, it is highly overpriced. If you have a 10-year view, it might be still worth it.
Okay, all right. We'll get to Manisha in just a bit to tell us about the commodity space, but let's focus on UltraTech Cement. You know, the numbers came in today, and initially the street was a little bit disappointed because there was a miss on the top line. Revenue did miss a little bit. You had the EBITDA number, though, that came in more or less in line, and that's why the stock did see a bit of a recovery. The only problem was that the volume growth was a smidge lower because it grew by around 9.7% because they've included Kesoram in their base year. And Jeffries one was expecting close to around 11%. But besides that, actually, the numbers look good. They were focused a lot on the cost side, which has helped them. On a core business, the core UltraTech business actually grew by only around 3.8%. Some would say it's a little bit disappointing. But otherwise, when the profitability is in line, the street will digest that. Very quickly, Anand, what's your view on UltraTech Cement?
Well, obviously, the consolidation in the industry continues. The only issue I have with the industry is that they are increasing their capacity faster than the sales growth. And therefore, to that extent, the economic growth in terms of profits doesn't keep pace. But as the consolidation progresses, there will come a time when you will be able to manage both the volume and the prices. And at that point of time, you should expect to see a steep upside. Right now, I think the sector is fully priced.
Okay, all right. Thanks for that. Well, let's focus on the metals pack. Strong economic data coming in from the United States and hopes of some kind of stimulus from China. That's what's sparking a rally in metal stocks. Manisha joins us to decode that for us. Manisha, nothing wrong in hoping, right? And we keep hoping that China is going to throw up something. Tell us more.
Oh, well, absolutely, Nigel. Every few days and weeks we hear that statement coming in from China, but it always does support metal prices, and that's exactly what we're looking at in today as well. The decline in dollar index has been supportive. Markets are anticipating a China stimulus measure to come in. Remember, there is China Politburo meeting happening as well, and that would set course for the rest of this year in sense of economic policies coming in from China. And then apart from that, you also have seen strong US economic data as when come in. The retail sales was better than expectation and the jobless claims did decline, so that has been supportive as well. If you look at the copper prices, we're not trading too far away from its all-time highs, especially in the US market. The premium between the US and LME still stands at a tall 25% there. Remember, we are getting to go to that tariff starting from 1st of August, and that is what is keeping the market jittery, given the fact that US only has 2 mining smelters there, and that would keep prices supportive. Aluminum prices trading at a March high as well. We've seen prices gain up by 4.5% in the matter of last 1 month. Not just copper and aluminum, you have zinc trading at April highs too. The Chinese smelters are facing pressure to cut, and there is product capacity outpacing demand right now. That is another thing to watch out for. And in the ferrous metals, you have iron ore prices trading at a 3-month highs. You have steel trading at a 2-month highs as well. There is lower supply, expectation that China demand will increase quite strongly. All of those factors clearly supportive. So when you look at the last 1 month in sense of metal prices, the best of the gains clearly coming in with copper with 15% of a jump up. You have iron ore prices up by 13% as well. But it has been between 6 to 7% of gains that you have seen come in for the rest of the metals as well. So it's not just about today, but on a weekly basis, monthly basis as well, metals seem to be doing well.
Indeed, metal shining today yet again. Thanks, Manisha, for that. And thanks, Anand, as well as Chandan, for joining in and giving us your view on the markets and individual stocks. Well, we'll slip into a short break. On the other side, we'll tell you about all the top corporate voices that joined us. And also then we'll be telling you how to prep up for tomorrow, all the events you need to track. Don't go anywhere.
Welcome back. You're with us on Markets Forward. Well, let's quickly take a look at all the key corporate voices that we picked up during the course of the day. First up, JSW Steel. The company reported a strong set of numbers for the first quarter. Speaking to us, the company's joint MD and CEO Jayant Acharya said that while the steel industry witnessed robust growth in the first quarter, global demand could be impacted by tariffs and the ongoing geopolitical tensions. He noted a moderation in Chinese steel production and added that the Indian government is expected to take a final decision soon on duties to safeguard the domestic steel industry. The company's overseas operations, especially in the US, have seen a strong turnaround. However, lower exports led to higher inventory, which in turn resulted in an increase in the debt. Acharya added that JSW Steel has filed a review petition in the Bhushan Power and Steel case and remains quite optimistic about a favourable verdict.
Well, up next, L&T Finance gained closer on 3% despite a muted showing in the first quarter. Speaking to CNBC-TV18, the MD and CEO Sudipta Roy said that the firm's credit cost guidance could be achieved without any macro-prudential support. He added that the MFI asset quality is now expected to bottom out in quarter 3. Earlier, they were guiding for around quarter 2. Roy also said that he expects 20-25% AUM growth in FY26 with strong traction in gold and two-wheeler segment. On the ROA or return on assets, it's likely to reach 2.8% in the next couple of fiscals.
Okay, next up, let's talk about the day's listing. Anthem Biosciences rallied almost 30%. This is on day one as it listed today. The firm's management is expressing optimism about the company's future outlook. While China has long been a dominant player in the contract development and manufacturing organization space, a clear shift is underway towards other countries, says the management. The company has seen a surge in inquiries recently, with conversions anticipated over the next few years.
Well, then before we wrap up, let's get you all the key events you need to track for tomorrow. Vamakshi is joining in to give us a run-through of that neat list. Vamakshi, take it away.
Well, absolutely, Nigel. Not many economic cues to watch out for. It is largely expected to be an earnings-driven market. Now, global earnings, we'll be watching out for Coca-Cola as well as General Motors. But back home, we'll be watching out for companies like Colgate, Palmolive from the financial space. Keep an eye out on Credit Access Grameen, M&M Financials, as well as Paytm, Dixon Technologies, KEI Industries, Idea Forge, Dalma Bharat, so on and so forth. All of these companies are expected to report their numbers in tomorrow's trading session. So watch out for all of them. As far as corporate action is concerned, some companies are going ex-dividend. This list includes Poltam Transformers, Strides Pharma, as well as Happy Forging. And lastly, keep an eye out on Shyam Metallics, because along with their Q1 numbers, the company is also expected to consider fundraising.
Okay, all right. Thanks a lot for that, Vamakshi. For the time being, we'll wrap up on this edition of Markets Forward. We'll be back, though, on the other side with more news and updates.